Good evening. Welcome to my channel, All About Ireland. Thanks for making my first video viral, and indeed, 15 to 20 people reached out to me uh, to thank me, or if they had queries, they just asked me those things, and I kind of clarified some of their questions. Next in this series, I thought, okay, I'll make another video on the finances where you can save a lot of money and have a good retirement. And this video is about tax relief on pension contributions in occupational pension schemes or PRSAs or other kind of pension plans which are out in the market. When it comes to pension, a lot of people do not want to contribute towards their pension because they think they're too young and they don't really know if they stay alive till their retirement. And some people do not contribute anything to pensions because they think the state will take care of them. So as you know, you get state pension when you retire. But either ways, you never know what will happen in the future. So it's better to save now rather than uh, getting into trouble yourself when you're old without a home or without money to survive on. You would have heard a classic story on ant and grasshopper, where ant saves food for their winters, whereas grasshopper doesn't, and grasshopper dies. So this is similar to that. Be ready when you can, when you're young, start your pension contribution so that the compounding effect kind of helps you and makes you reach your target. Like you can have $1 million if you start investing at 21 at your retirement, which is again free money. So when it comes to pension contributions, most of the people are usually on occupational pension schemes. But again, I'll try to cover other things too. But this particular video is for full-time employees who want to save taxes and save money for the future. If you're not that kind of person, I don't think there's any point for you to watch the entire video. So plans-wise, there are 4 different plans: occupational pension schemes, PRSAs, RACs, QROPS. I'm not going to talk about what those plans are. I'll probably do another video if there is enough engagement on this particular one. But otherwise, if you see here, the tax reliefs on pensions, okay, if you're under 30 and if you can contribute till 15% towards your pension scheme, and that 15% will be tax-free. For example, if you are 25 and you are getting a salary of 40K, 15% of 40K would be close to 6,000 euros, right? So that 6,000 euros is basically tax-free. You can contribute your pension, and you can get tax relief on that money. When I say tax relief, it's something like this. Now, 40K, you will be paying 40% taxes, okay? And you're losing 40% of whatever money you're earning, like 40 euros for every 100K. Now, if you contribute that particular 100K to your pension fund, you kind of save that 40%. What do I mean by that is, like out of 100, you are contributing 100 towards the pension. This 100 will be taken off your salary at gross level. For example, if I'm contributing 5,000 from 40K, this 5,000 is tax-free. So you kind of don't pay any 40% tax on this, and this entire money, is in the pension fund. Basically, you are making 40% profit right away, and this money again, I mean, if you're invested in equity pension funds, tracks the index or performs better than the index, and every year it grows 5%, 6%, 10%. Good years 20%, bad years 3% or negative, like this year, and keeps on compounding till you retire. Like if you are contributing at 25, imagine how much the money would be worth at 65. So these percentages, if you look, like if you're between 30 and 39, you can contribute 20% of your gross salary and get tax relief on it, and 40% profit right away. This is the best trick or technique everyone who has financial knowledge uses. They don't not just invest in equity market, they also invest a lot in pension fund. And For the past 2 years, I've been doing that. For example, if you are between 40 and 49, you can contribute 25%. You contribute more and you save more if you have a target. So my target is to save well more than 1 million euros for my pension fund. So you have a target, and based on that target, you can put the percentage limit on your salary. I think I'll be doing 15%, 20%, 25% going on. But again, I'll leave it to you because you also need to look at your short-term needs and investments. Few disclaimers. The maximum amount of earnings that can be considered for tax relief is 115K a year. So consider this when you are investing in the pension funds, like multiply with the percentage and stuff so that you don't lose out on the 40% profit. And if you have an occupational pen scheme, your employer also contributes towards that. So the percentage does not include employers' contribution. Like you can contribute 15%, and your employer can be contributing 6%. So it can be 21%, but you are still getting tax relief on your 15%. Whereas PRSA, let's say you are contributing 15% and your employer is contributing 6%, and you are under 30, you have tax relief only on 15%. So you basically pay the tax on the other 6% which your employer contributes. So in that case, what I would be doing is I would be contributing 9%. I'll let my employer contribute 6% so that I get the tax relief, complete tax relief. But remember this: when you are, you're contributing to your pension scheme so that you get a good pension when you're old. There'll be taxes on the annuity, because you also be taking state pension, and then you'll be withdrawing your private pension. Then based on your income, there'll be a few taxes. But again, it's a 40% profit right away, and imagine the compound effect, and imagine the lump sum you can take tax free, and other things which can happen when you're old. It's very simple to get the tax relief. Again, basically you need to log into revenue.ie, manage your taxes. You click on manage your tax and click on claim tax credits, and under PRSA you will see, under you and your family, you'll see PRSA, and you can submit PRSA claims during this year, or you can carry forward some of the relief that was left over from the previous year. I'm just taking you to the screen there just to show, like, you basically enter your gross employment income, net relevant earnings. Again, for what amount are you looking for relief, and you can carry forward a few amounts, and then they take your employer's contribution too, because as I said, PRSA, it considers the employer contribution to be benefit in kind, so you get taxed. It's very simple. Yeah, it's a 40% straight profit if you are in 40%. If you're in 40% category, if you're on 20% category, it's 20% profit right away. I hope you contribute yours to your pension schemes from now on and have a blissful retirement. This particular video is sponsored by careerlineland.com. Do visit their website. They do have a nice team who kind of help you in progressing your career. Thank you. Subscribe to my channel. Comment below if you have any questions.